Hi guys, it's Thomas here from COTbase.com. Welcome to this week's COT review. Today we're going to have a look at the fourth Commitments of Traders report of 2013. And as usual, we're going to start off with the changes in commercials positions. So here we go. We've got Canadian dollar on top with a 32% change in commercials positions. And a huge 67% change in small speculators positions. So that's a very large change. If you look at this 52-week range, it's the largest. I wouldn't be surprised if it's the largest in its history. It's just amazing. Also, large speculators and commercials have changed their positions pretty rapidly. So all this suggests to me that this little rally that started a few days ago could easily continue. But let's have a look at the 5-year chart and see how this market looks, how extreme the COT report is. If you look at the past two occasions when small speculators were close to the zero line and commercials were actually going towards net long territories, usually that coincided with a bottom in prices. So we're headed that way. It's difficult to tell whether this is the bottom end and we're going to be seeing a rally from here. Of course, the change signal could help us with this trade. Both the change signal and the COT extreme suggests a bullish picture. Moving on to gold, a 21% change in commercials positions and a 25% change in large speculators positions. Not that huge changes compared to Canadian dollar, at least in relative terms. Large changes, larger than average. But I'm more interested in about the COT extreme. So let's open the 5-year chart. Here we go. You can see we're going to analyze commercials charts first. That for the past few years, so not the whole 5 years range, you can see that we're at a relative extreme. That suggests prices to go a bit higher from here. This is supported also by small speculators. If you look at their chart, usually when they are very optimistic about the market, if you look at these 2 points over here, that usually coincides with the top. But we're not there yet now, so we're not there. Of course, one could say also that we're not so. They're not that pessimistic either. So they're more or less in between these ranges. So who knows? Maybe not the best market to trade this week. British pound, 20% change in commercials positions over there, a 38% change in small speculators positions. What's interesting to see is I can't tell looking at this chart whether commercials are actually net long or net short, but they're right at the zero line. So it's basically small speculators who are pessimistic about this market. That's usually a bullish signal. And opening the 5-year chart, let's see how extreme this market is. We've been talking about this market last week, and I was telling you that once we see commercials reaching zero or above zero levels, if you look back over here, usually that coincides with a bottom in prices. And it's really the COT signals really work on these currencies. So if you look at all of these points that I'm showing you right now, it's all reassuring that once we get to these levels, usually they're good buy opportunities. Of course, this decline could continue for a few more days, weeks before we really get there. But anyway, stress levels are high, and I want you guys to look at this market. COT extreme in large speculators. Let's move on. Let's have a look at that. You can already see while we're getting the data that we've got a few all-time signals. Platinum, palladium, Russell 2000. Let's open platinum first. Right away, let's get started with the 5-year chart. Here we go. All-time signal. I've been talking about palladium last week, that this extreme could easily widen before we get to a really nice a short opportunity. We were not far away at this like a few months ago when we had this top, but prices didn't really decline. The decline wasn't as dynamic as we were expecting it to be. So actually, we're not surprised that the COT extreme is widening as we're experiencing this rally. So palladium. And actually, just a warning, of course, these metal markets do correlate with each other, and we've seen at gold that the picture was a bit more bullish than bearish. So one looking at a short opportunity just because we see these all-time signals does not necessarily mean that we're going to be seeing lower prices in the near future. But anyhow, just have your eyes on these markets because the extreme is high, stress levels are high, and usually that coincides with the top or bottom. Russell 2000, all-time signal still in large speculators, 519 reported extreme in commercials positions. Prices are just going higher and higher, so stress levels are building up in this market. Another great market to have your eyes on. And last but not least, cotton. 257 reported extreme in both commercials and large speculators positions. So you can see we've been talking about this last week, that a few months ago we've been talking about a good long opportunity because we had commercials net long, and whenever that happened, usually that coincided with the bottom in prices. So we're getting a price reaction to that. My only concern is the dynamic, the way positions are being changed. So maybe it's a bit too rapid, and we're getting to levels where we're going to be expecting a top to happen. So it's an interesting market. Anyways, that's going to be all for this week. Anybody who would like to have a look at other COT charts, then come out to our webpage and check our COT charts page. If you're interested in more in-depth analysis, then come and check out our subscription service at cotbase.com. You can add other very useful tools to your table, or look at new type of COT reports, CIT, TIF, disaggregated maybe, or the futures and options data maybe. So all of these are really useful tools to have a very good and in-depth COT analysis. So again, I appreciate your attention. I hope you enjoyed my report, and I hope to see you next week. So take care. Bye-bye.